for mis-selling. So sometimes regulations that and laws to make sure we do the right thing. I've already introduced the panelists, so allow me to call Mr. Justin Mwandu. Of course, the details of his profile are already in the notebook that we have. I will not repeat that, but please allow me to invite Justin to talk to us about legislative policy-oriented regulation and non-legislative regulations. Please note that, non-legislative. Nobody is telling you follow, but we must sit down and agree that we need to look at those, and this is to ensure a level playing field in the insurance market. Justin, you're welcome.
Good morning. I expected to have slides here. Anybody responsible for this? Okay. There. This one. Thank you. Now, as the moderator said, my task here is to look at the legislative policy-oriented regulations and non-legislative regulations in the field in the market. Now, you see, I expected that because as a panelist, we could have been led by the moderator by asking some questions so that we respond. But later we were told we have to prepare slides. So excuse me for that. Now I'll approach this topic by asking some key questions. One of the questions is that is Tanzania insurance law still as it was some 20 years ago? Well, the answer to this, I will try to highlight some key issues which came about after, especially after the amendment of the first law, Insurance Act of 96 or 97? 96, I think. Which was repealed by the current law, which is of 2009. Now, some of these improvements is the very famous cash and carry system, which was introduced by the amendments of 2017. Now, of course, we came up to this system after a period when we were operating like we are not professionals. This is the time when people, especially we, brokers, we were holding the insurance premium for a long time without knowing that this money was required to perform the function of paying claims. So there are a lot of outstanding premiums due from brokers especially. And one of the measures which a regulator takes when he wants to renew your policy, he makes sure that you have no outstanding premiums due to insurers. But in this particular case, if you fail to justify why you didn't remit the money, the commissioner can even deny your renewal. Now, what was being said, or the excuse was to tell the commissioner that we have a payment plan so that you continue operating. But these payment plans were not met. And especially, we find that, I'm sorry, this problem was very prominent with the big brokers. Now, of course, there was no way out. The commissioner was to come up with these regulations, new regulations, that now we depart from the usual practice of paying no keeping of premiums. So with this, the effect of this, that nowadays no days of grace, as I said, and previously the market has a practice of premium payment warrant, where you would pay in installments, but at least you pay a deposit. Now with this cash and carry, we no longer have this system. Now it is working not only to the detriment of the policyholders, because now policyholders are forced to pay upfront, which is not the practice in insurance sector, especially when the business is passed through the broker. So all in all, this regulation was introduced to remove abuse by some players in a view to protecting policyholders. So it had a good, but regulations sometimes, when they are passed, they don't live forever. And I'll come to a point later when that we players, if we exercise a professionalism, we can convince the regulator to, consider whether we should continue with this practice or not. Because we have not done research on this, but I'm sure most people are not insuring, or they are taking simple products simply because they cannot afford to pay premium upfront. Now, even if we are saying we have this, premium financing by bankers, this, to some extent, is just, to me, it's just an additional cost to a policyholder, because the banker is not giving this financing for free. It's on business. You are taking a loan. Now, the worst thing with this system, it was very unfortunate. When the system came, there was also a policy decision by the government that we pay VAT on premiums, which even added more on the expenses of insurance. Now, as a matter of time, we can continue with another development, the bank assurance. Now, this one came, of course, with the 2019 regulations in bank assurance, GN 216. Now, this system was thought to at least add some players who, it is thought, this player has some, people have some confidence on it. That is the banks. For a long time, the relationship between banks and customers is very good. So it was thought that if we introduce this channel of distribution, then we could increase distribution to especially people who use bank facilities, who are many. Now, of course, the system, historically, this type of channel of distribution, bank assurance, is not very old. it is prominent in Western Europe, and it started actually in France in 1970s. And that's why even the name is derived from its French name, Bank Assurance. This was in 1970s. Now, of course, the system is not very prominent in, it's not very practiced in UK. I don't know now. It is not very prominent there. And it's just a recent development in US, because in US there was a contention, like it is here, that banks will bring an unfair competition, and because banks offer loans, they can even pressure their would-be customers to take insurance simply because they want that facility of loans. But of course, there is no research to show that, although there are some malpractices to some extent, which people are complaining about tight selling in our system. Now, what banks do mostly in these countries like Europe and elsewhere, they mostly transact life business. And actually, this is the purpose of banks. Banks should not go into complicated risks because they have no expertise. So you find that globally, for example, in 2018, about not 20, this is not 20%, this is 29%. So the typing error. 29% of life insurance was sold through bank assurance. So you can see the importance of bank assurance, especially in enhancing life insurance in our country. If seriously they take this as their major, because this is where now we want the trust. They believe that, banker customers have a trust in their bankers, or in the banks. And for that matter, the bank can easily convince a person to take life assurance, even through the savings they make with banks. And now,